All right, hello everyone coming in. I think my mic is good for right now. Want to make this quick live stream, and quick for me is under 20 minutes, right? So let's get under 20 minutes. As you all are coming in, make sure you hit like and hit share. Hit the hearts if you're on Instagram, Periscope. And as you're coming in, I'm gonna give you a different do now, whether you're watching this video live or on the replay. I want you to answer the question. This is your do now. Do billionaires use credit, right? Do billionaires use credit? A lot of people suggest or state that billionaires do not use credit. Another thing, I probably will go live on Thursday. I'm going to teach how to convert credit into cash, how to use and leverage credit and credit cards for debt acceleration if you want to accelerate your debt. Why your cash must grow at 3% or higher. So these are topics that I probably go into, and why you should use your credit card as a line of credit, why you should look at your credit cards as lines of credit and actually deposit your paychecks in, right? So you all are coming in. I know you're dropping your city and states. You're saying hello. I'm doing well. Thanks for asking. Thank you so much for asking. All right, Fort Lauderdale. And as you all are coming in and dropping your city and state or just saying hello, I want you to as I fix my shirt, quickly, you all like to see my shirts sometimes, so I'll let you see it. This is my Woman Dow Art Wealthy shirt that I'm wearing. Let me adjust my camera for YouTube. Woman Dow Art Wealthy. This is something that I have trademarked and processed, and this is really an upcoming book idea. So as you're coming in, thank you so much for the compliment on my shirt. As you are coming in, I want you to answer the question. Do billionaires use credit? Yes or no? Do billionaires use credit? Again, hopefully Thursday I can go over the topic of why it's a great idea to always deposit why it's a great idea to deposit your paycheck, right, directly into your credit cards or lines of credit. How credit cards or credit in general can really assist you with debt acceleration, and how to leverage credit cards for cash flow, and why you need to grow your cash at 3% or higher. So I have mostly Periscope coming in. Periscope, make sure you swipe, share the hearts. That's mostly commenting. And then from here, I will get right into the topic. So I definitely have a lot of yes, right? Okay, thank you. One person that has a different opinion says probably 99% of the time. Oh, no, it's not a different opinion. They never use their own money. So if billionaires never use their own money, what do you think they do with their money? If billionaires never use their own money or their own cash, what do you think they do with it? I'm going to give you a couple of seconds. All right, some people, Periscope says invest. All right. Invest. People still coming in or saying hello. So I just came from the gym, had a very good workout. All right, someone said save or invest. Had a good workout at the gym, but I am tired. I am fatigued on that workout. Carla has a different opinion. She says, loan it out. Okay, you think they'll loan it out? So let's look at a billionaire organization, right? Because most people suggest that debt is a bad thing and why you should never use it, right? Why you should never use it because someone else says leverage it, and why you should never use it. But I've been telling people all the time, you need to watch what big businesses are doing during this time as we are entering into this recession. You need to watch what big businesses are doing during this time and how they are thriving or surviving or will survive, right? So let's look at the article. It headlines, why Apple is borrowing $7 billion while sitting on, check this out, sitting on a $200 billion cash pile. So out the window is the myth that billionaires don't borrow or use credit, right? So Apple Inc., one of the most cash-rich companies in the world, is still looking to get a piece of the ultra cheap money that is up for grabs in the bond market. So if the most cash-rich company in the world, thank you for retweeting that on sharing that tweet on Twitter. I said that correctly. If the most cash-rich company in the world is looking to get a piece of ultra rich or ultra cheap money, then my question to you is, why aren't you building your credit? Why aren't you taking advantage of the cheapest debt at the time frame right now? It says with investment grade bond yields hovering near record lows, right? And now we have mortgage rates, mortgage loans at record lows. Even credit cards are still 0% interest rates. Transfers. It's tempting for Apple, with more than $200 billion of cash investment securities on its books, to see what investors will lend. They just wanted to see. I will not wait till I need credit to try to get it. I will not wait till I'm in a desperate situation. If you can get cash advance on your credit cards right now, if you have 0% balance transfer offers and you're not transferring that money into your checking account, my question to you is why? So they just wanted to see what investors will lend. Turn out the number is $7 billion, or just over 3% of its current coffers. With the 30% treasury record lows, many companies have been able to borrow more cheaply for much longer. Apple, check this out, listen closely, will pay around 2.99% interest on its new 30-year bonds compared to 3.45% it's paying on its 3-decade of bonds sold in 2015 on a $1.5 billion issue that equates to saving nearly $7 million. Borrowing is saving them $7 million of interest annually, or more than $200 million over the course of 3 decades. Today's debt sale, check this out, debt sale could help Apple refinance. So they're using it as a refinance strategy. Roughly $2 billion of its debt that's scheduled to mature this year, in addition to $10 billion it has coming due in 2020, right? Apple's not the only one seizing. They're calling it the golden opportunity. So you can either prosper during a recession or you can get poor during a recession. It's all up to you. Apple's not only seizing the golden opportunity, a record 21 investment grade companies, right? 21 Investment grade companies tapped into the market Tuesday, borrowing $27 billion. $27 billion with more than a dozen deals in the work Wednesdays. This week, insurance is already set up to $54 billion. So let me explain to you why you'll always be in the rat race, because exactly what someone just commented. I am scared to borrow and can't pay back. That's why people are afraid. And I never understand why they are afraid of credit card debt, because credit card debt is non-collateral, meaning that nothing is attached to it. You can file it in bankruptcy if you can't pay it back. If it reports as a charge off on your credit report, you can get that negative item deleted under the circumstances that it's reporting inaccurate, incomplete, or unverifiable, so that mark won't even hurt your credit score, right, with the right credit wisdom and knowledge and application. Or they will negotiate you to pay less of the credit card debt than what you borrowed if you're ever in a situation where you cannot repay. Now, people will say this about debt, that they're afraid that they can't pay it back. And I appreciate your honesty on YouTube for saying it. But they won't be afraid to get into mortgage debt or vehicle debt that they feel they can't pay back. It only relates when it comes to credit card debt. And why is that? Or when it comes to business credit debt. Number one, because you haven't been taught to use credit cards as a line of credit to create more cash flow. You've been taught to cut up your credit cards, to never get in credit card debt when there is little ramifications for credit card debt. Now, this is what they do with their cash. Billionaires, the rich and wealthy. They stack their cash, as the article stated, and the multimillionaires get to a point where they don't use their FICO scores anymore for approval, right? They're not using their FICO scores anymore. They are using that cash as leverage as they invest their cash for a higher rate of return. Some of them even convert cash into money. I'm going to say that again because I know you might not understand it. Some of them even convert their cash into money. I'm going to say that a third time. Some of them even convert their cash into money. So, what is money? I'm going to answer those questions that says, what should I be doing if I'm debt free? If I was debt free, I definitely would be getting cheap credit if I had a good credit profile. That's what I would be doing. I would be getting cheap credit to invest and acquire cash flowing assets. If I had no bills and I had a great credit score, I would use my credit to get cash flowing assets, because your cash must grow at 3% or higher to outpace inflation. And if you've been following me for any amount of time, you know that inflation is the increased prices of goods and services every year. Right. So I want to share with you this article. If I can pull it up. It was recent. I just just put it up today. And I'm going to explain what I mean when I say that let me see. That multimillionaires convert their cash into credit. I just shared this article with someone today. So let me share it, and so I can pull it up and show you all. And so if you're on Instagram, you won't be able to see the article, but you can just listen as I read out. So what is money, right? What do millionaires and billionaires do with their money? Or do with their cash, and how do they convert it into money? So let me share my screen. This article. I'm debt free too, and I'm wondering what should I be doing now? I'm saving, but what else? Are you saving for assets? Cash flow and assets? Are you looking at investments that can give you cash flow that will, and because I tell people all the time, because you're debt free doesn't mean you're financially free. It just means you don't have the stress of paying certain bills. But it doesn't guarantee financial freedom unless you find a way to make your money grow. Because your income, your job raises are not outpacing inflation. Even if you're debt free on a house, it requires maintenance to keep up. It requires property taxes or you'll lose it. It requires bills and utilities to be paid. Are you investing your money so it can grow and outpace inflation? Right? Because if you're saving your money in the bank, that money is not getting any interest on it. Cash is the lowest yielding asset there is because no one is paying you to store cash, not even the banks. They don't want it. They invest your money. LG says he's thinking of the stock market. You know, it's something that the middle class and the poor working class is now investing to a stock market that's going on the downturn because they think they're going to buy stocks at a cheap price. But the rich and wealthy have pulled their money out of stocks a long time ago. They've taken their earnings and they pulled out of stocks a long time ago, but only the middle class and poor working class is dumping their money in the stock market, which is going on a down spiral. And that all has to do with financial education. I would not be investing in anything that's going on a down spiral for the long term. If I was doing stock right now, which I have a little bit into stocks, but I trade stocks. I don't keep or invest in stocks, or I'm not looking to invest in stocks for the long term. As a matter of fact, you have people that are losing money in their 401ks that may need to convert their stocks into the bond market or just into a savings account. They're not losing, but they're not gaining. I would not really agree with infinite banking at this time either. Just because, well, I guess it's pros and cons of infinite banking. Your money could be growing at a safe, secure rate, but depends on what infinite banking setup you have, which I have notes on that over here. You can be charged up to 6% to take out a loan on infinite banking. And your cash has to be stored in infinite banking for a certain amount of time before you can take a loan out against your cash. So this is where the rich and wealthy is stacking, or how they convert their cash into money. The article reads, gold tops $1,800 and hits its highest level since 2011. So what the rich and wealthy do is they take cash or currency, this paper money that depreciates and loses its purchasing power, and they buy or they put it into physical gold. Why is that? Because gold is real money. It's God's money. By the Constitution, in the Constitution it reads it's money. However, gold is not viewed like that because many people have not been taught that in 1971, paper or cash was just used to be a lighter way to carry currency in order to retrieve your actual physical gold. And so in 1971, President Nixon took the dollar away off the gold standard, meaning that the dollar used to be backed by gold. If I gave you paper money, then I can come back at a later date and retrieve my physical gold from you. Or if you pay me with paper money, I can take that paper money to the bank and tell the bank, I want the physical gold for this money. And so Spain was on their way to America because they knew the dollar was depreciated on their warship, right? And I asked someone right now what I think is a stupid question, but I said, why did they come on a ship? Because if they would have flew over on a plane, they could have arrived in America sooner before President Nixon took the dollar off the gold standard, and they could have retrieved their gold, because then other countries were allowing America to retrieve their gold because Saudi Arabia and all that deal came into play in the late 80s, and the dollar became king, or it became known as the petrodollar, because Saudi Arabia agreed to only accept American dollars for its oil, right? So when it got moved off the gold standard, what made it powerful again was that Saudi Arabia oil, another commodity, backed it, which was the petrodollar. So Spain saw that the United States, where the economy was headed, and I asked the question, well, if they would have came over on the plane, they would not have had time. You know, President Nixon would not have had the time to take the dollar off the gold standard, because by the time Spain had arrived, he had changed the law and they couldn't retrieve the gold, right? But then the person explained to me, well, Queen, if they would have came over in a plane, they wouldn't be able to fly with all of their gold back. So they had to, transport it on a ship. So that's what happened. America took it out the gold standard. They wanted to keep the money, and it's prevented Spain from being able to come and get their gold. So that's your history lesson. So gold is still money, right? JP Morgan, JP Morgan Banks testified that gold is real money. In the 1900s, he testified under oath in court that gold is real money. Everything else is just credit. So even cash is credit. Even cash is credit. It's just a depreciating credit asset to have. So the article reads, these are strange times on Wall Street. Stocks are surging on optimism about a potential economic rebound. Yet investors are very nervous about the growing threat of a second Rona cases in the United States. Just look at the rally in gold. The price of the metal, aka money, is now above $1,800 an ounce. It's the highest level since 2011, and it's creeping toward a record high of more than $1,900. Now, look at this. While people are always talking about investing in the stock market, gold has soared nearly 19% so far. Listen at this, people. See, if you knew what real money was, you would know how to treat cash money and keep it in its place, and you wouldn't get taxed on this cash money. Gold has soared nearly 19% so far in 2020. 19%. That beats S&P. That beats the stock Dow Jones. 19%. Gold continues to surge is a bit curious given the comeback in the broader market. The pop in gold prices earlier this year made more sense as gold often, listen closely, since gold often tends to do well in times of financial stress where fear is prevalent. Why do you think gold does well in financial stress and in recession? Right? Gold's continued surge is so I just read after the initial dip following the 2008 Lehman Brothers bankruptcy, gold rallied as the market melted down later that year into early 2009, for example, and gold prices hit their all-time high in 2011 after Standard & Poor's S&P downgraded the United States credit rating amid market jitters about Europe's sovereign debt crisis. Gold as a hedge, mounting anxiety on Wall Street over the C virus helps explain the surge in gold prices. The CNN Business and Fear and Greed Index, which measures 7 indicators of the investment settle, is edging back towards fear territory after hitting greed levels over just a month. Yet investors continue to flock to gold, a sign of stress despite a huge rally in big tech stocks in the broader market, a sign of confidence. So buying gold could be a good hedge against potential stock market pullback if the rebound in the earnings and the economy doesn't materialize in 2021 as expected. So it goes on to say how all of this stimulus could eventually weaken the dollar. Say this again. And then it also states, Sparrow pointed out that gold prices tend to soar when the Federal Reserve is keeping interest rates extremely low, as they are doing now. The Fed is also trying to boost the economy by getting more money into the system. With this, various loan programs, again, cheap debt. All of this stimulus could eventually weaken the dollar and create higher inflation. So for the people that's telling me you are debt-free, do you understand that the more you save your money and let it sit in banks, and you're not investing or you don't have intents to invest, then your money is losing money? Because again, even debt-free, without your cash flow increasing, not cash, because cash loses its value or is losing its value, the more they put to the stimulus, the more economy, the less it's able to purchase, right? Okay, so Tyrone on my YouTube said Alliant Credit is best for banking and Navy Fed is good for loans and credit. I'm not saying, I'm not telling anybody to buy gold, but if you bought it when I was teaching on silver and gold as insurance, then you will be looking good. I don't know what it's projected to be by the end of 2021, but it's only going to continue to go up from here. But right now it's, at $1,800 an ounce. You could have got it for cheap, like $1,500 just a couple of months ago, right? So gold is real money, and that is still a return on your investment. So Aries saying she is debt-free, but she's looking to buy a house, so she don't have a home that she owns outright. So yes, 2021 will be a better time. Housing is still overpriced right now, still overpriced because the mortgage is cheap to buy a house with, but they're still overpriced. I mean, you can get a FHA loan for about 3%, right? But you're going to be paying almost $10,000, $15,000 more for that house. If you're looking for a house that's not old or age, but the housing market right now is still overpriced. You will find a great deal on houses in 2021. They'll be about 6-10% cheaper than what they are now, and the debt will still be cheaper. And so thank you so much on Twitter. Gave me a shout out on Twitter. I think someone on Periscope shared this. Thank you for following me on Twitter. I just got that message that popped up. And so people, if big businesses are using debt right now, then why would you be afraid to use debt in assets, in physical, tangible assets? If I just want to purchase more gold right now, I prefer cash flowing assets. Gold is a capital gains asset. But if I want to purchase gold right now, I would take my credit card and buy. If I had a $10,000 credit card, I would buy all the gold that I wanted, but I prefer to invest in cash flowing assets right now and not capital gains. But what I am doing is investing in the next best thing, which is silver, because silver is still about $20 an ounce. So gold is king, but where gold goes, silver goes. Silver is going to give you big returns this year as well. And that's why I provided my silver stacking report on my website for people to purchase so they can know what type of silver they can buy and have when you resell that metal, right? When that price escalates as well, that you won't pay taxes on the capital gains when you resell it. So silver at $20 an ounce, if you want somewhere else to store your money, versus just letting it sit idle in the bank and not producing anything, that's a great way. Also, the cash flowing home-based business that I'm a part in, I tell people to invest in that. So, those are cash flowing assets. And it's recession proof, meaning that it centers around credit, and 40 million Americans right now, credit scores are dropping. And August is going to look even uglier because a lot of people have had payments on deferment or forbearance. And in August, those late payments will begin to report on their credit report, and they won't be able to get this cheap debt or cheap credit, right? What else? Cash flowing assets, real estate and land. I'm definitely investing in that as well. And again, if I do anything, I do have some cryptocurrency because the Bitcoin halving just happened this year. And I know I'm expecting Bitcoin price to just go through the roof in a couple of months with that halving that just happened. And some other altcoins as well, not just Bitcoins. And swing trading in the stock market, just swing trading. So that's what I'm doing. Also in the home-based business that I'm in, they're having a big announcement, I think in 10 days, and God is not making any more land. That's another commodity. And I'm investing in land out of California through my home-based business. And so again, if you knew how to use credit cards, right? Even depositing your paycheck, it's called paycheck parking, into a credit card and using that credit cards to pay all of your utilities and your bills. Now, in some cases, it may not can be used to pay your mortgage note with, but if I had a credit card, and which I do, that give me cashback rewards, I will be paying all the bills I could on my credit card to get those cashback rewards, because I look at that as a means of passive income for using my credit card like a debit card. So I'm not really using any of my travel rewards cards right now because I'm not traveling with this, Rona going around and things like that. But I am utilizing and taking advantage of the cashback rewards. And what I do is I pay all of my bills, all of my expenses, all of my daily essentials out of that credit card. And when I get paid, I deposit my entire paycheck in that credit card to pay down that balance monthly. And then I do have some cash that I'm stacking, not in the bank, but in a credit union. In the event that I need cash within 24, 48 hours to make an investment or to just leverage my cash to get debt. So because Navy Federal, for example, have good loans and credit cards, I stack most of my cash there, not in the bank, because credit unions are known to lend more and to be more lender friendly during times of economic recessions and reset. And so I stack in my cash in Navy Federal. In the event that I come across an investment, I'm going to use my cash as leverage to use their money, the cheap debt, and take out a loan against it. So right now it's chess, not checkers. You can know the rules of the game, but because you know the rules of the game does not mean you will win. See, in the game of credit, the queen is able to promote a pawn to a king. And credit, if you make $50,000 a year, you can get $50,000 worth of credit in a day. On a year's salary, you can get in a day of credit versus what you can earn a year in labor. And so you can take, again, credit is queen because you can always promote a pawn to a king in the credit game. The queen can move vertical, horizontal, many directions. The queen is the most powerful. The king is the most important, but the queen is the most powerful. And your credit is the most powerful tool you can use right now. You can invest in physical assets with credit cards. That's why you don't get taxed. Whenever you're on a website to purchase physical gold and silver, you don't get taxed on that because it's money. But you get taxed on cash. When you earn it, when you spend it, when you save it. How do you get taxed on cash when you save it? It's called inflation. $1,000 in 2010 won't buy you what $1,000 in 2020 will buy you. So it loses its purchasing power. And I tell people again, you get taxed again when you die. Right? Exactly, Jesus. That's a good thing. But honestly, if I was her and I was stacking my cash, I would leverage that cash to get a loan out. Because if she took her cash, and this Instagram, I'm speaking to someone that's debt free. If she took her cash and bought a duplex or a triplex, you're going to get taxed on that purchase. You're going to get taxed on that purchase. And then you're going to get taxed again from the income from your tenants. But if you use debt, which is tax-free or credit, when you take out a loan to purchases with, that loan is tax deductible. So now when you repay the loan every month, you get big tax deductions for it. And that income that you're getting from your tenants is taxed less. You're moved to a lower income bracket. I would never use my cash to purchase physical assets with, ever. Ever. Unless I was going to a local pawn shop and I'm buying physical silver or gold. And when you buy physical silver or gold in a local pawn shop, it does not get taxed because, again, it's real money, cannot be taxed. Only this paper money can be taxed. And so I will always leverage my cash money or my cash currency. And if I did anything with it, I would convert into physical, to real money. And I would leverage it. I would leverage it to buy cash flowing assets. Just point blank. And I would always use it, for example, if you're converting credit cards into cash, which can be done by simply getting balance transfer checks. Call your credit card company, see if they offer balance transfer checks, see if they will. Do you have any balance transfer offers at 0% interest rate? That's why I love credit cards. They are the cheapest that there is. Credit cards you can use at 0% interest rates. Zero for up to a year or 18 months. You pay that check out in order to yourself, deposit to your credit union or your bank, right? And you convert that into cash, and now you can leverage it out to, right, either get a loan or a credit, or you can have it to make a physical investment. But I prefer a loan or a credit so that you can get those tax deductions, because debt is always tax free. All right, Tyrone Williams, I have 17K saved. 2K more for unemployment. Don't want to invest right now. Okay, you hold 2021. If you wanted real estate, would be a good time to get that. Buy dividend stocks. Start with $10. Learn to invest small. I just wouldn't invest in stocks right now. The market is about to crash big time. Probably before November, the presidential election. So even, if I did dividend stocks right now, it would be anything in the biotech sector that's dealing with this Rona, or it would be mining stocks and silver or gold, because your mining stocks right now have about a 15% dividend payout, and where price of silver and gold is going, that would be good, right? But I'm not giving financial advice though, Right. Kim, she said, great idea. Don't invest if you don't know what you're doing. Take a class. If you've never heard about stocks and swing trading, the first investment you should make is in a financial education and taking class on it and how to select stocks. A lot of people are losing money in Robinhood, but I'm just letting you know the rich and wealthy have already taken their money and got their gains at the stock market, and they converted their cash into physical gold and silver. And another reason why they're doing it is because it's not taxed. They know how to sell it back and not get taxed on it, right? Do your company offer credit repair? Yes, use my website. Go on the Credit Help tab on Periscope. Credit Help, get started there with this credit analysis for $75 small investment. Boyce Watkins is an expert on investing. He is, but he's shifting that now because he's teaching people how he has a sponsored ad on Facebook, how to prepare for the stock market crash. I see that in my timeline all the time. So I will always be a trader in the stock market, because most people don't ask themselves, when you lose money in the stock market, where does that money go? Do you ever ask yourself that question? When I lose money in the stock market, where does it go? Who is getting rich off my losses? Just ask yourself that question. The rich gets richer in a recession. Tyrone says, I have 48,900 in personal credit and 9,000 in business credit. That's the way to be, debt free. And I like the way you phrased that, Tyrone. You understand the difference between credit and debt. Credit is anything that puts money in your pocket. Debt is anything that takes money out of your pocket. Leverage is using the bank's money, TBM, at a lower rate to get a higher rate of return, right? What is the best ways to raise your credit score if you are debt free? That's a good question because, of course, your credit score is based on how well you pay your accounts and your bills. Honestly, stack your cash and leverage cash. I mean, if you have enough, you can still get some good loans and good credit. But I would really, this is me. I don't give financial advice. I would really look to get a part of a great credit union, like Navy Federal is the king of credit unions, if you can. I would start depositing my cash in that credit union. And they even have a good thing right now on secured credit cards. If you can't get their $25,000 credit card limits that they offer. But if you have direct deposit with Navy Federal, even if you have a thin credit profile, and what I mean by thin is you don't have any debt reporting, right? I would set up my direct deposit with Navy Federal. I would get these 2 trade lines. These are $5,000 trade lines. You do have to buy some cosmetic things, but you're not getting quote unquote in debt. It's a membership, and you have to pay like $99 for that membership. And then every month you pay something, you purchase something, pay it off in full. This report to all 3 credit agencies. That first link is www.bit.ly 500K trade line. And then get this second primary trade line. Keep them for like 90 days. Get into a good credit union if you can. Get into Navy Federal. It's a gnat flying around. Hold on. Get into Navy Federal. See if you have a family member who is a member. And speaking of that, I need to get my family member a call back. And then this is the second trade line. I will get these 2 trade lines. I would create a relationship with Navy Federal if you know a family member, and then get my direct deposits there. Wait about 3 months, and then apply for a Navy Federal credit card. With these 2 credit lines, you should get a credit limit at $5,000 or $10,000 or more. And that's being that you have no negatives on your account. You just don't have anything on there. And so you have to, build credit. This is a way where you're not necessarily getting in debt. You're purchasing products, you're paying in full every month, and you're getting high credit limits, and you cannot get denied. You will get approved, and a report to all 3 credit agencies. After I do that for 90 days, I set up their direct deposit and go ahead and, go for Navy Federal. Now, Jay Smith, what credit reporting agencies do Navy Federal use to determine their credit decisions? Navy Federal, it is by geographical location, and then Navy Federal has their own internal score rating. I know a big part of that is direct deposit plays a big part, as well as you having a good credit profile, right? So in her case, I'm assuming she just don't have established credit. So for me in Mississippi, for example, Navy Federal pulls from TransUnion, but if you're in another state or geographical location, they may pull from the other credit agencies. You're welcome. Oh, you're already a member. Maybe you're already playing this chess game. So you're a member, you have a credit card, continue to set up your direct deposit. Navy Federal has a platinum card too, that they were offering a 0% balance transfer for the next 12 months. So if you already have one credit card with them, I don't know if you have any balances to transfer with them. But I would definitely call them and ask them, does that platinum card comes with balance transfer checks? Now, I don't think it did. And so, yeah, because I had to do my balance transfer online when I got that platinum card. But you can call and ask. They may change some things because PenFed gave me balance transfer checks as well. Now, since you're already and you have a credit card in good standing, what I would do, and I think this website is creditcards.com, is go to creditcards.com and look at, let me share my screen with you. You always keep me on longer than what I want to be. I wasn't planning on being on this long tonight. But look at 0%. Don't sell offending credit cards. Find the right one. I love Citi. I have this one. They have 0% balance transfer, at least 18 months, right? Since you already have a Navy Federal cards, if you want double cashback cards, they had a Citi double cashback. You get two for the price of one here, 0% APR transfer for 18 months and double cashback. And, I would apply for those cards, right? But I would ask them first, if I get approved, would I be able to receive balance transfer checks? Because when you receive those balance transfer checks, you can write them out, pay them out in order to yourself, and you can convert credit card limits into cash that way. I don't think Discover offer balance transfer checks. That's worth looking into as well. I would definitely, I always read the reviews on any cards. And a lot of times they would, it even tell you what the card highlights, and so this is a very, creditable source. And Discover It also have a referral. See, this is how you make money off of credit cards. Because I think with Discover It, once you get a Discover It card, they will pay you a referral fee to refer other people to use the card. Another way to get money off of credit cards, right? So, but this is just without me looking at your credit report, assuming that you have a good credit profile, and which you have in a Navy Federal card, those major credit cards. But don't take my word as bond, because I'm not looking at your credit profile. I can't say you will or will not get approved. I don't know what that looks like, but that's just, me right off the top of my head trying to answer your question. How can help get inquiries off? You have to go to my website, www.fixmycreditandcash.com. And people, some of these questions I'm not going to answer if you all don't give a super chat, because it takes this is really consulting when I answer your questions, and I usually charge people for consulting. So because it's helping you answer questions about your financial life that you otherwise wouldn't know what direction to take. I keep putting in the wrong website. But anyway, it's www.fixmycreditandcash.com. Hold on, let me try to get it right this time. And go to credit. And I typed it in. Go to credit help tab. You have to still, even with inquiry removal, I have to see how many. I don't do 5 or less. It has to be 5 or more. And it has to be accounts that you did not get approved for. And the reason being, if you are stating to challenge for an inquiry be removed, that you did not give the company permissible purpose to pull your credit, and you have an open line of credit or a credit card, for example, with that company, and you challenge them with the credit agencies, they can very well close your credit card account, right? Because you have to state to get an inquiry removed that the company did not have permissible purpose, right? So, yeah, so everything with me has to start with the consultation. And so that's it. Just know you should be using your credit. If you have a credit card, you definitely should be using it to invest in a home-based business. That's a good cash flowing and tax deductible business, and it aligns with credit. And it's helping 40 million American credit scores are dropping or will dropping. And it's going to be a credit crisis, right? It's going to be a credit crisis in August, right? So that's it, people. This has been an hour stream for me. Periscope, I see you all are making a lot of statements in. So make sure you swipe right. Hit those hearts on Periscope so I can get my views up on their platform as well. And you all, okay, yeah, you go to my website, www.fixmycreditandcash.com. Credit help, or you can get that silver stacking report. Okay, I think I see something else. All right, so that's it. I may not go live tomorrow, but I definitely will see you all Thursday again. Thanks for tuning in. Here's to your health and wealth, your peace and prosperity, and your credit and your cash flow. On Thursday, I'm probably going to do the live stream on how to convert credit into cash or credit cards, and how you should look at your credit cards as a line of credit and not as a bill, right? As a line of credit that you should consider paycheck parking or direct depositing or dumping your paycheck in those line of credits, and why they can accelerate you getting out of debt. All right, Queen of Credit out.